Hello traders, this is Orlando for Tradimo and welcome to this week's weekly market breakdown. In this weekly market breakdown, we're going to go through a lot of things. First of all, we're going to go through the trades that we took last week and either if they hit the stop loss or if they hit our targets. Then we're going to go through what happened with the UK's Parliament and the Brexit votes that were held last week. And finally, we're going to go through what to expect um, on the next week's price action with a view on the economic calendar. And FYI, next week is going to be very busy for the US dollar and the pound. So let's go to our Slack community and let's see the two trades that were filled for us last week. All right, so if you can see here, um, we have a loss of 14 pips on the US dollar Japanese yen, and the original risk on this trade was about 45 pips. Now let me just find the um, the actual signal that went out on our Slack Force community. All right, here we go. So this was sent on Monday, March 11th. Long a trade idea with a buy stop on the US dollar Japanese yen at 111.20 with a stop loss at 110.87. So what happened is that we got in here. Um, like this. So basically, we entered right here at the break above the previous high, and we put our stops below the previous low, and with a 32.5 pips stop loss. And then what we did when we saw that price hadn't moved for apparently a day and was chopping like this, we decided to lower our risk and put our stop below the previous below the previous higher low, and we got ticked out for a 14 pip loss, which is fine. It's just 14 pips, one trade. We move on to the next one. All right, the second trade was a short idea. I'm sorry about that on gold, and our entry was at 1305.60, and the stop loss was at 1310. So let me draw this for you, and then I'm going to explain what happened with the trade. All right, traders. So here it is. Maybe I'm just going to zoom out on this chart on gold, right? So we can see what happened. All right, so basically it was a very interesting position on gold, and we went short of the break of the previous low. We couldn't short higher. The better entry would have been right here. Let me show you. Right here below this low at around 1308.40, but I mean that was during the Asia or the APAC session, and we were asleep. So basically, we shorted when we broke with the previous low, and we had our targets right here, the previous base at around 1298. And as you can see, the price of gold went through our went through our target for a nice 95 pip win. And when this happened, we move our stops to break even or plus 8 pips, and we got stopped out when when pricing gold surged after hitting the 1294, um, the 1294 level for an 8 pip win. So basically, those are the two trades on which we were filled last week, right? And um, we managed to end the week with a pip count, with a positive pip count of plus 89 pips on two trades last week, which is great for which is a great start of our premium forex channel. And now let's go on to what happened last week during the Brexit votes in the UK Parliament. So basically, we had three votes last week. The first one was held on Tuesday, which was the meaningful vote on which Prime Minister May proposed minor changes to the deal with the European Union, and this deal was rejected by the UK Parliament. The second vote was held on Thursday, if I'm not mistaken, and the Parliament voted on if there was still a no deal Brexit on the table, and the no deal Brexit was rejected by Parliament, which means that there will be no hard exit by the UK from the European Union. And the third vote were four amendments. We're going to talk about two amendments that were voted on last week. The first one was to delay the Brexit for a second referendum, which was not supported by Parliament. And the second amendment, which is called the Ben Amendment, which gave the UK Parliament control of Parliament schedule, which has no political precedent. And this vote did not pass, or this amendment did not pass, for a very thin 311 votes to 314 votes. So this amendment did not pass only by 2 votes, which gets us to where we are right now. Okay, so next week we are going to have yet another vote on Brexit, and so the UK Parliament will vote to decide on passage of the deal triggering Article 50 with the European Union uh, on Tuesday, March 19th, next week. So heads up to that. And right now we're going to go through the economic calendar to see what schedule important events we have for next week. And like I told you at the beginning of this video, we are going to have a hectic week with a ton of economic data and central bank decisions on monetary policy dropping for the UK and for on the US for the US dollar. So let's go through the economic calendar right now, and then we're going to we're going to analyze a few of the charts and the levels that I am going to be watching next week. So nothing major going on Monday, but on Tuesday we have the average earnings dropping from the UK, which are the change in the price businesses and the government pay for labor. All right, and we have the unemployment rate out of the UK. So we have some very important job numbers coming out of the UK on Tuesday, and of course we have. The Parliament Brexit vote that we already talked about. On the Wednesday, we have inflation numbers coming out of the UK as a consumer price index or CPI and the RPI. The difference between the CPI and the RPI is that the RPI only measures goods and services but for the purpose of consumption by the vast majority of households, and it includes housing costs which are excluded from CPI. So very important inflation numbers coming out of the UK on Wednesday, and not only that, but later in the day we have the federal funds rate decision or the decision of the Fed of whether to increase, to hike or not the interest rate in the United States. And of course, we're going to have the FOMC statement and an FOMC press conference after the fact. So very important day, Wednesday, on the currency markets, and we're going to be looking out to position ourselves if we can before these announcements. And of course, we are not going to front run any of these numbers. And front running means that we are not going to be taking any positions before the announcement, just basing ourselves on the forecast that are given by analysts. we are in a position, we are going to protect our position, but if not, we are going to step out of the ring and just watch it from a distance. So let's continue on the economic calendar for next week. And on Thursday, we have the Bank of England decision on the official bank rate on whether to hike it or not, which is huge on the UK, given that we are going through this Brexit process, and not only that, we are going to have a monetary policy summary, and the last hike on uh, official bank rate in the UK was in, let me see, the last hike was about, I think it was June and last year. No, it was in August 2018 when they hiked it by um, 25 basis points from zero point 0.5 to 0.75. And the official forecast is that they are not going to be hiking the official bank rate out of the UK. But again, we are going through this Brexit um, process, and we are going to be keeping very safe when it comes to the pound next week. Now let's go. Why don't we go for to the charts and let's see what's going on with the US dollar first. And right here we have the DXY chart. Okay, so basically the DXY is at a very interesting area. Now you can see that we are well, since we tested the 97.70 level, we have dropped about let me see, let's grab the calculator tool, and we have dropped about 133 pips, right? From high to low of the move. And again, last week, by the end of last week, um, we started to bounce from the 96.40 level, right? The 96.40 level, all around the 61.8% retracement of the entire move to the upside. Not only that, but we do have some very interesting zones of support, right? Right here, very important zones of support and very important or very high volume zones, which I expected that we were going to be bouncing from. And again, this bounce was what gave us the flush in gold that gave us a 95 pip win on our short gold position this last week. But again, I can only see a bounce on the US dollar if we get a rate hike from the Fed, and I see that that's very, very unlikely. But again, we don't know what's going to happen, and on Wednesday we're going to get that announcement out of the Fed. But for the time being, I remain bearish. I remain very bearish on the US dollar. And if we do get a bounce, I need, well, let me just get rid of these two lines right here. And what I would need actually to to change my bias into a bullish bias, I would need, first of all, a break of this trend line to the downside that has been tested twice already. And I would also need a break above this level. Now, why I need a break above this level? Because as you can see, this is a very strong level of support, which is also a high volume zone. And when we broke to the downside, we tested it a lot here, and uh, then after testing it and after trying to break above it, I mean, let me just zoom this in for you guys right here. After trying to break above it, right, bears took control of the market and pushed price down. Again, bulls tried to break above it, and bears just slammed price down again. So not only I would need a break above this trend line, but I would also very much need a price to start trading above the 96.80 level for me to turn bearish on the US dollar for next week. But for the time being, I remain I'm sorry. I would need that. I would need a price to start trading above the 96.82 level to turn bullish on the US dollar. But for the time being, I remain bearish or neutral if we don't break with the previous low on the US dollar, which brings me to this gold chart, right? Which brings me to this gold chart. And even though we traded this move to the downside on gold, I was expecting, let's go back again to the US dollar chart. I was expecting that this move would break above this zone and it would break with this trend line and we would start trading above to test the 97.70 level again. That's why I went short on gold, and that's why I only took half of my position when I hit my first target and moved my stops to break even because I was expecting the price. I'm sorry, I was expecting the US dollar to continue to rally, but that didn't happen. So I had to protect my trade on short position in gold by putting my stops at break even on the second half of my position. So what basically happened is that the um, um, the US dollar hit that 96.80 level and then bears took control, which made for a bullish run in gold. Now gold is at a very interesting spot, and I wouldn't mind to see I wouldn't take, I'm sorry, a long position on gold just yet. One, because the market just opened. Well, this it is full on in the APAC session, but I don't trade the APAC session, okay? Which means that I will only trade gold if we actually move above this high or this very, very nice level that we have here, right? Which is around the 130450 level. And I would want to see um, just a move above, right? Um, maybe a retracement back to that level to continue uh, with maybe a buy in gold. For the time being, I remain as flat, and that is because I haven't started my trading week. This is the weekly market breakdown, guys. All right, so this is just the levels that I'm looking at, and on the upside in gold, this is the level that I want to be trading above for me to be on alert for a maybe a long position, right? Now, if the US dollar actually moves to the upside, that will mean that gold would start traded to the downside, which would make me a seller if we actually break with this level, which is around the 1294, 1294.50 level. So basically, right now we are in no man's land in gold, and these are the two levels that I'm looking at for a possible entry next week. Now let's have a look at the British pound. All right, we should have started with the British pound, but I mean, because we're looking at the dollar, I decided to go ahead and start with the gold. So let's have a look at the British pound and this craziness that we had last week. All right, let me see if we can pinpoint the votes that we have on Brexit last week. Well, actually, that's not very important. And let's just look at some levels. All right. Now, this is the 113 level of which move I don't remember. So basically, what I'm going to do is I'm going to get rid of a few Fibonacci retracement levels. That was it. All right. So this line at this white line at the 1.3270 level. I'm going to go to the daily charts for you to notice which line I'm talking about. This one, actually, I'm going to color it uh, yellow so we can differentiate it with the other ones. So this is the line that or this is the resistance level that I was looking on the daily, which actually was broken with twice already. So we have to move it up to right about here. All right. So this is a very important zone on the British pound. And the most important zone that I'm looking at is actually between this yellow line and these highs at around the 1.3425 level. All right, so let me just grab this rectangle, and this is the actual zone that I'm looking at on the pound to the upside. And remember that we're going to have that Brexit vote next week, which means that if we do get a positive vote from the parliament and they accept Prime Minister May's um, deal, the pound is going to be surging. All right, and we're going to have a rally in the pound, and of course, we have unemployment rate. I'm sorry. Um, yeah, job numbers out of the UK, and of course, inflation numbers out of the UK, which means that we are going to start looking forward to these numbers. And we have good forecasts in inflation and job numbers, or unemployment rates and average earnings on the UK, which means that that is going to be helping for a bullish move on the pound, which means that I am going to be looking for a break above this level to start a trade and um, to start a buy position in the pound against the US dollar. For the time being, we remain, as I told you already, um, flat because the trading week just started. So let me just get rid of these channels that the pound already broke with, and I'm going to focus on this level. All right. So as you can see right here, this level has been tested twice already, and because this is Sunday, we have very little volume on the British pound. But basically, this is the level that I want to be broken to the upside in order for us to start or even start to think for a long position in the British pound. Remember, guys, that here at Tradimo or the Forex channel at Tradimo, we trade with um, we trade on the I'm sorry about that, guys, on the longer time frames, and we don't day trade, or we don't just look to get in and out of the market for a 20, 30, 40 pip win. We focus on the bigger picture and the bigger moves, and for the time being, um, we are going to be looking at this level for a buy position, maybe. Now, if and remember, because we have such a big and or a heavy um, week for the British pound, we are going to be looking at those numbers very, very closely. And if we break with, if we have bad job numbers and bad inflation data out of the UK, we can expect the pound to start trading down. And this is the level that I'm focusing for a bearish bias on the British pound, which is the 130 level or the 61.8% retracement of the last move to the upside. And that would mean that I would be bearish on the British pound against the US dollar. All right. Now, I'm not going to be looking at the British pound against the Japanese yen because let me show you guys the 1 hour chart on this currency pair. I mean, it hasn't moved at all. So very, very difficult to be trading this currency pair right now. And yeah, some of you might think, but there's a triangle formation here. Look, and if we break with this triangle formation, then we might have a trade in our hands. But again, this is just way too risky, in my opinion. And now that we're looking at this currency pair, I must, I might just as well analyze it a little bit. And now these lows are the lows that I'm looking out for a break below in order to start going short or change my bias to a bearish bias on these currency pairs, which means that I would want the price of the British pound against the Japanese yen to start trading below the 147.40 level for me to start thinking of shorting this. And remember, this is my favorite currency pair to trade. And last week we did had a few positions that were not filled. But if you stick with me, you're going to start seeing that this is one of my favorite currency pairs to trade because of its big moves. Just check this out. I'm going to show you this. Just look at this massive move. 300 in, sorry, that's 350 pip move to the upside in about what? A day, right? In about a day. That's 24 bars, and that's one day we'll have a 400 people. So that's why I love to trade this pair. But remember, big moves also come with sometimes have bigger or wider stop losses, which means that you need to be careful and you need to know how to manage your risk when you're trading this currency pair. Now let's go and let's finish this weekly market breakdown with the US dollar against the Japanese yen, right? So the US dollar against the Japanese yen, we did get ticked out for a 14 pip loss last week, which is fine, completely fine. I mean, when I don't know about you guys, but I do not only use a stop loss, a fixed stop loss, but I also use a time stop loss, which means that if the trade that I am in hasn't moved in my favor or hasn't moved the way I want it in a given period of time, I'm going to start to manage it or maybe even consider closing it, okay? Because when we don't have volatility and volume comes into the market, uh, there's there's now not only method working in your favor, but also luck. And on my trading, I try to get rid of the luck factor as much as possible. But again, we are still trading inside this huge bull channel. So yeah, I'm still very bullish on this currency pair. And in my opinion, this currency pair is the one that right now is giving me um, the most clean price action, right? And I am bullish in this currency pair, but the thing is that we have tested the 112 level far too many times, and this is a high volume zone, which means that there's a lot of big sellers stepping in here whenever we trade within this level and try to break above it, sellers just come in and start pushing price down. But again, this move to the upside is very, very strong, and I do consider this a bullish opportunity if we break with this zone, which is a very important support zone that we traded on December 2018, and when we broke to the downside, we broke it with a very, very strong bearish move. So, very important zone here. On December 2018, there were a lot of big bulls stepping in, but then they were swept by bears. And now that we have come back after the flash crash to test it again, uh, bears are stepping in. So this is a very important zone. Big money is stepping in here, and to me, in my opinion, this is a very bullish scenario if we do break with the 112.30 level. And this is about it for this week's market breakdown. And if you enjoy these kind of videos and analysis and setups and trades, well, I recommend you join our premium service at tradimo.com. And if you use the promo code Tradimo FX1, you're going to get 50% off your subscription. I'm going to leave you the details below this video, And if you are a premium subscriber, well, we are going to start to look at more exotic currency pairs and other metals this trading week. I wish you a happy end of weekend, and I'll see you guys tomorrow on our premium on our Slack community. Goodbye.